Hi, Ron. Hope you're well. It's Thursday. It's the 28th of November. Relatively quiet Asian session. Dollars come back a wee bit, and Europe's sort of meandering as well. We've got obviously got no US session today. Big, significant holiday in the United States. Thanksgiving. Everybody goes home. Families get together. Obviously, they get their roll out their Thanksgiving turkey. No doubt the White House will be showing that as that later, unfortunately, for the turkey, obviously. But yeah, certain sort of quiet markets this morning. We've had some inflation, as you can see here. Oh, you can't see the calendar actually. Let me just share the calendar. The calendar. There's a calendar. There we go. Spanish inflation a bit hotter than expected. 2.4. It's only one tick above, but it's up from 1.8% last time. So for October. So this continuing noise we see across all the developed markets about inflation being very much sticky, very much hanging around a bit. It's not getting right down to that 2% level or under the 2% level. Remember, in the UK, they did slip under 2%. They got it down, and now it's started to drift back up again. Similarly, in Germany, the German federal states release their inflation on a monthly and quarterly basis. And so this only fills in when they're all responded, have all finished, which is going to be in another 5 or 6 minutes. But one of the big states, Bavaria, where Munich is based, BMW, some big, significant manufacturing companies down there, some very significant finance companies as well down in Munich area. Very affluent part of Germany, and the inflation there came in this morning at 2.6, above the 2.4%. So again, even with manufacturing struggling in Germany, inflation is still sticking around, basically. So it's not something that is going to go away very quickly. It very seldom slips off the agenda. And then earlier this morning, we also had the head of the RBA, Ms. Bullock, talking about inflation in Australia being too high for them to consider rate cuts at the moment. So although she also caveated that with a comment saying that the committee is prepared to respond quickly, and they have done in the past, to any sort of sudden reduction inflation. So inflation, really the lead story in Asian and European markets this morning. So I say not a lot going on. Obviously, the US is closed today. So if we have a quick look at the charts, let's have a look at my charts. We have got gold. Gold is at 2646 at the moment. Share. There we are. Hope you can see that. Let's get rid of me taking up too much of the screen. I'm sure you don't you'd much rather see the charts. There we are. So this is the hourly chart on gold. Daily, actually, let's go back to the daily. The daily remains still negative given the big shakeout we had on the 25th. We've bounced back 26, 27, and today we're up again today. So it's looking like we may be having a good day for gold, but we'll see. There's obviously no direction. This I've marked here. I don't know if you can see it. The 2006 or 5 was this sort of 2-week low. This late November low we had on the 26th. On Tuesdays, we went down following Monday's sort of panic and sell-off after the announcement of the ceasefire between Hezbollah and Israel. That's is just this morning, which might have helped, or probably has helped. Got the hourly chart now on an intraday basis. There was obviously, I mean, it was never going to be a solid ceasefire. It doesn't. It just buys time for both parties. Obviously, the situation in Gaza remains very much on point, unfortunately, and there was claims by Israel that Hezbollah had sort of broke the ceasefire, so they fired into southern Lebanon again. Gold's obviously moved up on that. That was later on in the morning, but we'd already breached the 20-hour moving average here this morning on the 6 o'clock candle. So at 7 o'clock, this strategy here, this crossing moving average strategy, went long this morning, and we've rallied. We couldn't quite get to 26.50, We've peaked here at 26.94. Sorry, 26.49, I should say, and now we've sort of slipped and sort of moved lower. But we are still here on the hourly chart. We're still nicely aligned with all the moving averages, fanning out to the upside. Nice spaces between them, a nice angle. So this is the 50, the 20, and the 5 and the 9, the two key ones that we use for the crossing moving average strategy, which is what's on the chart currently. ATR, so that's the average distance this asset moves currently, is around about $6.3. You can see the ATR down there. That's this indicator down here. I am going to do some more technical webinars about how these indicators work and how the platform works over the next few weeks as well. So keep posted, as well as these live events. I'll record some and we'll get some up for you quite quickly. So whilst we're here, actually, there was a guy on our Discord channel yesterday asking about lot sizes and complication. What's the difference between lot sizes and other than that factor of 10, obviously, is so we can see here. But and that's very much the sort of the CFD trader mindset, because you had to worry about what the lot size was and how much money would it. It's very difficult to work out how much money you might lose if you lost, or how much money you might make when you won. With this platform, the TradeLocker platform, sitting on top of the TradingView, integrated very nicely with the TradingView platform. It's really, really straightforward to work out. So you can work out either your percentage, which is always my preferred way, and I always say to clients and colleagues and anybody else, and clients and people I've taught over the years, that can you see? I don't know if you can see all that because my head's in the way, isn't it? How am I going to make that bigger? Let's get rid of. Shame that I'm down here. Where can I? If I move, actually just get rid of me completely, I think might be the easiest thing. Just listen to me, okay? I don't want to see my ugly mug because I'm going to concentrate on this bit here, the order panel. So here over on the left, you see over on the left where my cursor is here. So there's the three key panels. So there's a markets panel, which is what the instrument is that you want to talk about, the asset that you want to trade. So currently we've got the gold position. No, so gold is XAU USD against the US dollar. So gold US dollar currently 2646 or 45 as it's changing. You see the times change, and then the 5 or 6 other metals we offer here. So copper, silver is XAG. So gold is XAU, silver is XAG. Down here, so this is against the dollar, this is gold to euro, and this is gold against the USD, but it's not the pro account, it's just the standard account. Okay, leverage is 50. Again, you don't really need to worry about leverage when you've got this markets, this trade panel here. So this is our trade panel, sorry, the order panel, I should say, not the trade panel. And the trade panel is what you're trading. This is my demo account here. My position account here, there's nothing open at the moment, so what's open, what's closed, any pending orders you might have, balance trades. Obviously my balance and equity are both the same at the moment because I've got no trades open. When you've got a trade open, the two are different. Margins available on that, and that's going up and down. So many people say, their account looks quite good, but they've got lots of losing trades. So make sure you understand the difference between balance on the account and the equity. Remember, equity represents the sum of the balance, credit, and the unrealized profits and loss. So the equity goes up and down. Balance might stay the same as if you've got open trades. Anyway, what I was wanting to explain a bit in this little video as well is how to actually sort of manage that, your expectations about how much you might want to win or might want to lose. With regard to not having to worry about the lot size. Okay, see here for some reason it's defaulted as 0.16 lots. But it's what is a lot? It's some people new to trading, as the guy was or the lady was yesterday on our Discord channel. Wasn't clear the difference between 0.1 and 0.01 or 0.1 of a lot. But, my colleague explained it very, very clearly, but let me just demonstrate how easy it is, and you don't need to really worry about that. Now, let me just, my battery is out, my power's just dropped off, so just excuse me a minute, and we don't want the power running out doing so. You can't see me anyway, but I've disappeared off the screen. I'm still here. I'm just going to plug in my workstation because we're out of power at the moment. There we are. We're about to lose power, but we're back on now. But anyway, so this is what we're going to talk about. We're going to look at this area here. So this is a market order. What does a market order mean? Well, it means the live price now. So we can either place a sell order or a buy order. What we're going to look at today is about how easy it is to sort of manage how much you want to make, how much you want to risk. So if we tick the risk tab here, okay, this is where our stop loss may be or may not be, and for some reason it's already. If we've got a buy, right, let's have a look where we are. So if we just go to the daily, let's just use this as an example here, the hourly time frame. So one of my favorite moving averages to decide whether we're going long or short is the 20 period. So as a demonstration, so my stop loss now, if this has moved up quite nicely this morning, stop loss might have actually been would probably actually still be down here on this big candle here. But anyway, that's, again, I'll do a separate video about how to run this strategy. But let's assume we're going to take a long position still, even though we've come down. So my stop loss, my key pivot area would be here, 2639. So I'm going to put 2639 as my stop loss area. That's what I want my stop loss to be. Okay, 2639, and I want to risk 1% of my account. And as you can see, the system here is telling me, also this is changing because the price is changing. My stop loss is fixed at this 2693 over. You can see this is the amount of ticks that's moving. That's a tick is a measure of how the price moves. So every tick is every time that the price actually moves is measured in the smallest amount is a tick. So it's 460, 445, 50, something like that. And as you can see here, 1%, that would mean I would lose $101.75. If, for instance, though, I didn't want to do that, I wanted to risk, I only wanted to risk $50. Again, it automatically tells me, well, that's 0.49% of your account, and you can only trade 0.11 lot. So you don't need to worry about lot size you're going to use, because the system is already telling you if your stop loss is here, Stuart, round about your 20-hour moving average. If the trade goes wrong and you lose money by only trading 0.10 or 0.11, depending what it is at the time, you'll know you're only going to lose $50. So that's a real comfort factor about when you're trading, and that's one of the big things that all successful traders will tell you. It's about accepting losing and also being able to deal with those losing trades, because it's most traders find it very difficult to lose. They find it very difficult to win as well, ironically, but more on that another day. But the key thing is always managing your mind and managing your emotions, and part of that is the risk of actually being in a live trade, and people get too close to it and too attached to it. If you're not comfortable with losing $50, make it $40. If you're comfortable with your account size of losing $500, make it $500. It's what works for you. For me personally, I always say I try not to think in dollar terms. I always think in percentages of my account, simply because if you've got a small account, you've just opened like a minimum challenge level. If you can do it with a small account, you've only got a few dollars to open a challenge with. Excuse me. And you're successful with that challenge, and you move on to start trading with a funded account. You can do that with a bigger funded account, a bigger challenge account, because if you're successful with a small account, you can be successful with a bigger account. It's very, very straightforward. That's one of the core principles of successful trading. So I always tend to think about this, and again, if you've ever listened to anything I've ever said on any of my webinars or seminars in the past, I always tend to think in percentage terms, because by taking the dollar concept out of how much you might win or lose, it takes away a bit of the elation of winning and the frustration of losing, and they're the things that you've always got to manage. So I tend to stick, or certainly I would suggest as you're starting off, keep the losses small, and you keep the losses small by risking small amounts. Most people don't do that. One of the great benefits of prop trades, and the proptrade.com in particular, is we let me share you can see uh, let me just share the screen. We can, there we are. On our evaluations here, we got brilliant offers on at the moment. So some of these fees are all a discount. I'll come to that in a minute. The the prop trades and the proptrade.com, we give you fixed parameters you've got to achieve. So we're already saying, well, we want you to be a successful trader, but you've got to follow the rules. You've got to get maximum drawdown 10%, maximum daily drawdown 5% here. On these standard accounts, you can, if people think that more mature traders that have traded for a while, they might not want to go through the two-phase process. I think they can jump to it. They can get to the 12% target. They can deal with, they can manage these tighter limits, but it means they can get started more quickly, get funded more quickly. And remember, when you're funded, you've got a funded account and you're trading successfully, up to 90% of the profits can come to you. And another great benefit of us in particular is our payout split start at 80%. There was lots of companies say up to 90%, but when you click on the small print, like you can see here, you see our standard performance split is 80%. Many start, I saw some yesterday, 40, 50, 60, and they've got like 5, 6, 7 stages before you actually get to 90%. Here, us, you start with 80, and we go to 90 and higher as well as we move forward. So there's all sorts of challenges available for all types of traders, from beginners to the more experienced traders. But anyway, let's just get back to the charts. This gold chart, and placing our stock. So I hope that's clear. You can see as I've been chatting, you can see how dynamic the thing is. Well, so my 1% now is $101.75. You can see the ticks are changing as the market's coming down towards the short positions. My lot order is changing all the time as well. Okay, so you don't need to worry too much about lot levels as you did with a typical CFD broker. This platform is dynamic and you can change it, and similarly you can do the same thing with the take profit, when you want, where you want to get out, and how much you want to make, or what percentage you want to make. So my own personal preference has always been around about the one, concentrate on 1% as my loss on any particular trade. Okay, and a maximum 5% loss. But again, you make sure you're aware of the rules. You've got 4 or 5% daily losses on your account. So take it step by step. On the flip side of that, if you didn't want to have a stop loss, you don't have to trade with a stop loss on many of our accounts. I always recommend you have a stop loss, because you know how much you're going to lose when you lose. I mean, there could be something sudden surprise and something moves the market. It does happen. And all of a sudden markets gap and you get taken out completely, where the market moves down against you very, very quickly. Your price doesn't get filled. Sometimes your stop loss doesn't get filled, but at least you have some sort of chance of a stop loss getting filled if there's some sort of major movement in the market that is a major surprise. So yeah, stop loss. But again, if you don't want to stay with a stop loss, I just want to play with you're a beginner, you just want to play with the lot size. Always, again, start. That's what 0.1's for. Start with small lots. It minimizes your losses, obviously reduces your profits when you're making a profit, but be aware of that the lot size and how it influences your positions. So that's how, you know, I really like this platform. It's very intuitive, and you can play with it and find a style that works for you, because we're all individuals. And you say I tend to focus on percentage loss. Other people, you know, like, oh, I'm going to lose 5 pips or 10 pips or 50 pips or 100 pips or $50, $100, whatever it is that works for you. There's pros and cons to all types of approaches, but it's what works for you guys, and that's the most important thing. But anyway, that's a little lecture over, or a little rant. I hope that's explained how useful and easy the trade panel is to use. We do a similar thing whether you're buying or selling, whether you're playing a stop loss, a pending order, a market order, but more on that another day. So let's have a quick run through the markets as well. So let me just clean up. Let's close all these so we've got a bigger screen for you to have a look at. Let's bring my ugly mug back. Any questions, guys? Please, please ask. So gold this morning was long here. We've rallied up. It's still long. And as I said earlier here in the hourly chart, stop loss there is keeping you in the market, 2640 at the moment, although we've rolled over a bit. Obviously not a lot of direction, given the lack of US trade and the lack of volume in Asia was clear, and also in the European session this morning, it's been quite very, very quiet as well. So 26 is the floor. 2700 we couldn't hold. We got over here earlier in the week, didn't we? But we couldn't hold it. There's that 2605 was this late November low for gold market. So a bit of a mixed bag. As I said, the daily is still short. I would argue, although now I think I put a post up on Discord this morning, where we were looking. I was looking at as we come to the end of the month, I was looking at the weekly and the monthly chart. The weekly chart is interesting. It still remains very bullish here. This is the weekly chart for gold. So we'd had 2 down weeks as we'd rallied to the this high here, this all-time high at 27.85, wasn't it, towards the end of October. The shock of the election took us down very significantly under 2600, but last week we bounced back very aggressively and took us back over 2700, but we've come down this week. So it looks like it's a down week this week, having a big bullish week last week, which is bouncing off the 20 period moving average here, which sits at 25.75, the 20-week moving average. So that's a key support area. So again, the weekly remains bullish. And the monthly is also obviously very, well, not obviously, but is very bullish. We've had a very good 2024 for the gold market. The last down month we had was January and February here. Very indecisive. February was the red one, but since then, the last 9 months have been very, very positive over that 2700. But this month we're down, and we're down nearly 4%. So as you can see here on a monthly basis, obviously November isn't yet over. There's only a day or two to go with very low volumes, one expect. But so October's final rally potentially has been wiped out in November. So this is quite a healthy shakeout on the strong movement we've had for 2024. So we're moving to December. People have had it for a long run, maybe starting to take some profit off the table. We shall see how it goes. But again, the monthly remains very, very bullish for the year and for the general overall rally we've seen in the gold markets post-pandemic, and back to 10 years ago when we were all the way back here at 1200. So the 20 period moving average on the monthly sits all the way down there at 2260. So again, gold remains bullish in the higher time frames, and today's hourly chart is also relatively bullish, maybe rolling over, a bit of a tweezer top potentially there, and on very small candle movements, but anyway, still to the upside. For gold, just bring the markets panel back in. That was gold. Silver, the other key asset or metal at many trade. We've been under, or we're back over, I should say, $30 this morning, having been down to 29.62 also on opening trades this morning. And again, that's another sort of 2-week low. This was the 17th 14th of November, we were last down there. So sort of biased, some big down candles here on the silver market this week. Here we are, these ones here. But we've bounced so far today and recovered the key $30 handle. So $30 proving a key support area. Again, if we look at the daily time frame on silver, still remains quite bearish to the downside. There's that 2-week low we've just poked this week at the 29.60 zone. So the daily 20-day moving average sits all the way up there at 30.96, just shy of $31. So the trend remains to the downside for silver, certainly for November, to the downside. Okay, let me just get rid of the panel because I don't want to use that. I was conscious of how much the screen's used up. So as far as the Forex market's concerned this morning, relatively quiet. I'll say some comments out of from the RBA chief about inflation being too high, Ms. Bullock, not really influencing the direction of the Aussie dollar too much. We're back to hang on to .65 today with the hourly chart, but that remains quite a serious resistance area, doesn't it, here today? So we were up following her comments earlier this morning and European trades. But we've stuck, we can't get over 65, and we've rolled down the last couple of hours as well, and very, very thin trades. Obviously, the Australians into their evening already. So thin trading there. Yen, dollar yen, I should say, but the yen, dollar came back yesterday, and the yen is one of the worst performers so far today as well. So 152 was the cap there for dollar yen today. Again, rolling over, you see how the candles are shrinking in thinned out markets. No pre-trading from the Americans, as we're we would be typically just an hour ahead of US Open today. So very thin markets on the Forex market as well. But that's bid as well. We're back over the 20. We're back into the 20s. So watch that to break. That's going to go further lower today. Euro 105.42 currently. Took back out the key 105 yesterday, rallied to 105.88 yesterday, but then drifted into close, and we've been sort of drifting most of the day. So 105.40 sort of sideways action. I say not a great deal to drive that. We've had that hotter inflation numbers out of some of the states in Germany and Spain, and comments. Really, the only major comment was, I say, from Ms. Bullock, the Australian RBA leader. The Chinese, I don't know, the German numbers might have all been finished, but I'm not sure it is. Yeah, so Germany's come in line. The overall, the federal states have reported now. So the number for German monthly inflation is minus 0.2 of 1%, which is in line with what was expected, down from 0.4 of 1% earlier in the day. So the minus 0.2 of 1%. That means the annualized number looks, where are we? Thursday looks, the states have reported. So the German, so the German number has come in at 2.2. So it's it's not as high as I expected. The overall, it's been rounded down to 2.2% from 2.2% last time, and 2.3% was the expectation. But minor tick move hasn't really influenced the movement in the euro at all. So euro 105.44 currently. Sterling also better against the dollar. The dollar's come back a wee bit. So we rallied yesterday to 126.97. Couldn't get to the 127 handle. although we're significantly over obviously the 126 handle, and then we've gone sideways again this morning from a dip down. We've taken that back, and we're at 126.66. 126.66, the sign of the devil for cable currently here on the hourly chart. So again, biased a bit to the upside. So although dollars come back a wee bit, it's still a little bit under pressure. The index is obviously on the DAX and the FTSE are open. DAX 19,400 currently. From the dip into the 19,100 level support we had yesterday, but the 19,475 high from earlier in the week we can't get back to currently, but we've bid into close yesterday, and we've had a better morning so far. But coming down at the moment, the hourly 20 period sits there at 19,348, so just under 19,350. So relatively bullish. The UK FTSE is also open this morning, 8,290. But again, it's not really one to get too excited about the FTSE. It's not doing much at all, and not one I really trade, to be honest. But there we go. DAX is much more of interest. The Japanese 225 at 39,328 had a good early start to today. Their actual trading session, it's come off. This derivative has come off a wee bit, but it's had a good bounce back from the drift lower, the move lower we had earlier in the week. The US markets, the derivatives obviously are available. The S&P 500 here back over 6,000. Incredible numbers, big move up. But we closed negatively yesterday. Yeah, we were off a bit yesterday. There's our new all-time high there at 6,034 on earlier in the week. We were lower yesterday. And these derivatives, these futures markets, sort of drifting a bit up with very little direction and very little volume. See how they see the ATR here, the amount of movement, the amount of volatility is drifting, being declining all week, as you might expect on the shortened week. So US closed today, Thanksgiving, I'm sure you're all aware. Shortened day tomorrow. It's open for half a day, but very low volumes expected. Many people take the whole weekend off, Thursday and Friday. Big holiday in America, Thanksgiving, probably more significant to many Americans than Christmas itself. But there we go. So that's Thursday the 28th. I'll do a little tomorrow. I'll do an update as well. I'll do a little video later for this very, very simple strategy. I'll explain how to set it up if those of you are interested, and we'll have a look at some of the other strategies as well over the coming weeks. So stay safe, everyone, and as ever, may the pips be with you. And if there's any questions you've got, do let us know. We're here to help. And don't forget our platform. Where we go? Let's just go back to the website. We've got a special promotion for Black Friday where you can get just find the discount off your these fees, and there we go. Let's bring up our Instagram feed. Our Black Friday deals, our current deal is running at the moment, so a 25% discount on our fees, and then once you're funded, you get a 150% refund of your investment. So these here we are. So starting from $55, there's a nice hefty discount on that. Find the 5,000 account. If you want to take a bigger account, obviously the fees are a wee bit higher, but the discount's there, and your refund 150% of that fee once you are funded. So 25% off the fee currently, and a 150% refund once you get to the funded stage. And you get to the funded stage, my friends, by being disciplined and following the rules. The rules are there here. That's what prop trading is all about. The rules are there for you to make you stick to them. Unlike in trading, accounts where you end up blowing your account just because you risk too much. And that's why most traders fail, because they risk too much. Here with prop trading, and the prop trade in particular, proptrade.com, we're very much focused on helping you be the best trader you can. So do come and join us. We're here to help. And as ever, may the trend be with you, my friends. Take care.